What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 23rd of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've got a wide range of topics to cover. We'll start off by taking a look at cryptocurrency markets, focusing on Ethereum Classic and its breakout rally over the last few days, and also talk about Patrick Byrne, the previous CEO of Overstock.com, stepping down from his position and the drama that has ensued around that. And in the sense of traditional markets, we'll be taking a look at continued failures in the India banking system, as well as growing fears in China, and why overall the economy, as much as we have given it so much stimulation in the sense of stimulus packages as well as monetary policy, still to this day is not truly showing any signs of fundamental growth. We've got lots of things to discuss, guys. Let's go ahead and jump right into it right after our quick sponsor. Our sponsor for this episode is Travala.com. Now, for those of you out there who are planning your next trip for either work or leisure, I highly recommend you check out Travala.com to place your next hotel booking. They not only provide a wide range of selections for places to stay along your travels, but also can provide upwards of 15 to 40% in discounts compared to other leading rates on booking websites. And to top it all off, you can use Bitcoin, Litecoin, XRP, and a basket of other cryptocurrencies to place your next booking. So if you want to learn more about Travala.com, check out the link down below in the description to find out more. Alrighty, everyone, so let's go ahead and dive right into the video and start by taking a look at cryptocurrency markets. Over the last 24 hours, we can see the broader market is up right now with very few exceptions to the downside. And I have to say, a decent amount of projects right now currently outpacing Bitcoin. Bitcoin's down at the bottom of this list. We're seeing a decent amount of altcoins, again, moving up 2, 3, 4 times the rate of Bitcoin here. Again, nothing too severe because these are much smaller cap cryptocurrencies. I think overall, some might be mid caps, depends on how you measure them in that case, but either way, broader market right now is in the green. It's a good sign to see, and again, we're finding support at very common ranges, not just here in the sense of overall market cap, but also here in the case of other coins. In this case, the broader altcoin market cap again starting to flatline here at a previous support range back here at around $80 billion. So it's good to see. I think, honestly, we don't have too much room more to go down in this case. I've talked about the idea that we could see Bitcoin retest down to the 21 week. And again, that could just be a waiting game. It could be that the moving average has to catch up to the current price and we just push sideways until then. So it doesn't mean that we're going to see much more downside action. But again, I think we've only got a short window of time here over the next week or so to really have an opportunity to kind of pay around this range for prices. But again, it's just what I'm assessing at the moment with the chart, and I'll explain my rationale for that. Along with that as well, Bitcoin dominance still topping out about around the same range it was topping out back before the beginning of the first altcoin cycle back in the early part of 2017. I had some comments as well. People were saying there's only been one altcoin cycle before, and why am I so confident about this level at 70%? It's not that I'm extremely confident about it, guys. It's just a significant level to take into mind. And when you reach these ranges, it's important to take those significant kind of percentage ranges of dominance into mind. Not to mention, we've actually had more than one altcoin cycle in the past. Really, if you want to take a look back at the last cycle, we really had two. There was one at the beginning of 2017 when Bitcoin started to accelerate and topped out around the range of 2,000 to 3,000. And then outside of that as well, we also had another altcoin cycle. The first altcoin cycle was when Bitcoin topped out at its previous highs at 1,100. That's when the altcoin cycle started, and it continued through to the rally around 2,000 to 3,000. And then also that outside of that as well, we also had a secondary one, which was in November and December, and then also a little bit in January of 2017 to 2018. So just want to make that clear, guys. Again, not saying it's guaranteed. I just like seeing the flatline price action here in the sense of market dominance, and we'll see what happens here. If we close below the previous lows here, have a good stark 1% decline below that, I think that's when you're going to see the trend shift come in, and there might be some risk taking on some of the more quality projects in the space, not all crypto projects. All right, so what am I getting from price here? Obviously on the chart here, I know a lot of people like to overcomplicate charting. I like the fact we're coming down towards a very common support range, 100-day moving average. Good to see this. Not to mention as well, as we talked about, we're going to keep on watching. If there's a potential breakdown and close below the 100-day, I think we're going towards the 21-week, which really isn't that far away from the 200-day. It's a little bit higher in this case, so we're not expecting it to go all the way down here to the the mid $7,000 range by the next week or so. I think if anything, you're going to get the upper $8,000 range at worst. And again, we also tested around this range back here as well. We had a lot of sideways price action here around the $8,000 range. But let's go ahead and really talk about what the chart's showing us right now. Again, no need to overcomplicate it, guys. We can go ahead. I love the feature here, for example, on CryptoWatch. It snaps trend lines to candles, which is really cool. And you can see here, we've been building up what seems to be a decent wedge here. Lowering highs, rising lows. And again, we're coiling in here to where sometime here, either in the later part of August or at probably the latest early September, we're going to have an either break up or breakdown in this case in price. Again, I'm not trying to guess on it. I would bet my money, personally, I've got my positions betting on this, that it's going to break up through this and continue with the kind of momentum we've had, the macro environment brewing around. But again, there's no guarantee of it, guys. Just letting you all know that's my thesis. And again, if it does break through here, the next range I'm going to average in is when we make contact with the 21 week. That would be reasonable. I don't think that would be bearish at all for Bitcoin, because Bitcoin still, with a retracement to the 21 week, is still up more than 2x from its lows. I mean, it's almost pushing 3x there in that case still. So again, we've seen a lot of upward momentum. We can't get too greedy. Overall market looks very nice. Now I want to spend some time as I take a look at the asset class here, for crypto, and just take a look at the broad market overview. Obviously, over the last 7 days, most cryptocurrencies are in the green, up, a good few percentage points. However, there's one that's really stood out over the last few days that's in the kind of leaders for market capitalization. That's Ethereum Classic. So I wonder, why is it that we're seeing a lot of movement in Ethereum Classic? Well, first off, one thing that this article doesn't mention, we're going to talk about, there's actually some pretty decent reasons in this to kind of focus in on why Ethereum Classic might be improving in the sense of its price. A lot of it has to do, I think, with the upcoming fork to the network. But before we dive into that, I think a lot of it has to do with the fact that there is a lot of what would be seen as kind of institutional entries or alternative entries into Ethereum Classic that sets demand. You've got, for example, the Grayscale ETF that a lot of people don't know about. There is obviously GBTC, which is the Grayscale Bitcoin ETF, but there's also one for Ethereum Classic as well. So this, again, is providing a way for some people who are a little bit more active on the trading side or have a certain brokerage platform that allows them to get access to it. I know a lot of people use, for example, platforms like E-Trade, things that sort can buy GBTC and also the Ethereum Classic ETF. But you also have other alternatives. You have Robinhood, which allows you to trade Ethereum Classic. A lot of different platforms that give you some kind of entry. So I think this does set alternative demand here outside of just cryptocurrency exchanges like Coinbase and other platforms that might trade Ethereum Classic in order to stimulate price in this case. So that's one thing. But outside of that, in the sense of news that could really kind of spark off this kind of movement here, there's a few different things. You first off have the Atlantis fork. Now, the Atlantis fork is really focusing on two things from my understanding of it. Again, there might be some other parameters that I'm not aware of, but the two major things that it's hitting on is it's improving the network security after the 51% attack that the network had, which is obviously a concern. You do not want someone to be able to commit a 51% attack or any form of attack that's going to basically, freeze your network from being able to operate as function, basically being able to double spend. But along with that, the other concern that you have to have in this case is whether or not Ethereum Classic will be able to communicate with other blockchains. And this is either, labeled as the topic of interoperability or just being able to function with other public blockchains, especially of similar nature. And that's what this is pushing forward as well. It's trying to push forward the ability for Ethereum Classic to communicate with the Ethereum network and like-minded blockchains in this case that have very similar frameworks of function. So I think this is really good to see. I like seeing more interoperable push, and I hope, with the moral message of Ethereum Classic versus Ethereum is that basically it's split between the DAO hard fork in this case, basically the rollback on the chain in this case where people disagreed on how to approach the DAO. I would love to see this kind of bridge come together and see the networks cooperate together. I'll be honest, no matter where you stand on that issue of the reversal of the blockchain in that case due to the DAO hack, either way, Ethereum is still the leader in this space, and I think it's very beneficial for Ethereum Classic to at least be able to communicate and cooperate with the Ethereum blockchain in that case. I think it's going to be a huge factor in its survival long term. But there is different theses as to how these blockchains operate outside of just a disagreement on rolling back the chain back a few years ago with the DAO hack. So there's a few other things as well. They've got a company called North Block Capital joining ETC Labs in their studio program, and this is basically going to be helping them to bring on new projects and hopefully help them raise capital and build a token ecosystem around Ethereum Classic, which, as we all know, brings in new money and then also gets a lot of new participants. And this is probably focused in Asia. And again, they kind of refer to that as well, their expansion to Asia, and then also the Ethereum Classic Summit coming up in October, which to me, again, is something less relevant. Now, taking that all to mind, though, again, we'll have to see what happens in the case of Ethereum Classic. Not really bullish on it long term. I think most of what's going on is happening in the Ethereum ecosystem. It's the truth of the matter. But again, whether you agree with the DAO hard fork or anything like that, or the rollback on the chain, that's a topic for another time. Now, I want to spend some time to talk about this because, man, I've been keeping up with this for the past few weeks, and I thought it was being like overhyped. But man, like there's an interesting story going on with Patrick Byrne, or at least it's been going on for a while, and we're just hearing about it. So the Overstock CEO, Patrick Byrne, as you guys know, Overstock has been accepting Bitcoin payments for a long time. They are the basic founders or the kind of funders of T0, which is a leading securities platform in the cryptocurrency space for tokenizing securities and different types of assets. He has now quit as deep state remarks cause an uproar in the company. Now, over the last few weeks, to give you guys a quick precursor, just to kind of the craziness that's kind of been brewing, there's been a lot of weird comments that Patrick Byrne had made, and he's just a, honestly, I really admire Patrick Byrne. I like a lot of things about him. This case is definitely kind of interesting and kind of weird and stuff. If you watch the interviews, I think Fox Business did an interview with him and stuff. You guys want to really hear him come out and talk about this topic. Anyways, past few weeks, there's been some drama obviously going on in Patrick Byrne's life for the last 2 to 3 years, and there was some really interesting comments about Men in Black showing up and asking him questions. And they thought this had to do with, originally people were thinking that this was, oh my God, the SEC, regulatory agencies are cracking down on Overstock and T0, and they've got a huge basket on their hands. And supposedly it doesn't really have much to do with that. What it really has to do with is that Patrick Byrne he ended up getting involved with a very big case of political espionage that he didn't realize he was really a part of, that was really meant to sabotage a variety of campaigns in the 2016 election in the United States. So it's a very fascinating story. You could turn this into a movie, but he decided to step down from the company. He wants to take all that drama and any kind of regulatory concerns he may have with the government outside of the picture. If you guys want the full-scale story, I recommend you watch the interviews. He's like me, he rambles on a little bit, but you can obviously tell he's in a distressed scenario. Something obviously, went wrong, or he's concerned about, speaking out too much about the topic. But really interesting how he got tied into a lot of the kind of drama from the previous election. Just definitely give it a watch. I think it's interesting. And again, I think he's talked about now he's going to move to South America, and he's going to pick up yoga and become a vegetarian and just kind of like get out of it all. I wish Patrick all the best. I'd love one day to sit down with him for lunch or dinner. He seems like a really genuine guy. He's like a hardcore libertarian. He's been in this space for a long time. I've seen old videos of him talking about why he believes in Bitcoin and the principles of the cryptocurrency movement. I know deep down I have a good feeling that he's a great guy, and would love to hear about his story. Not to mention, took down a lot of people in Wall Street for naked short selling. You should look into that, guys, if you don't know what that is. One of the first people to really call that out and bring people to justice. Now, taking a look at Overstock stock, that's kind of funny. It's kind of weird to say Overstock.com stock. Though it's down about 3% over the last few hours, the announcement came yesterday after he left, and people were like, oh, thank God, Patrick Byrne's left. The stock's up now because people were worried about these comments and what controversy it might bring. But the stock's up still, like, even with the correction, it was still up pretty much twice as much as the value where it was at the bottom of this year in June. I swear to, like, people are so sensationalized. Oh my God, he said something. Oh, the stock drops down from $25 to $18. Yeah, it's still up pretty much twice its value in a month. Get over it. Like, people are so like sporadic about this stuff. And I'll tell you, I think Patrick Byrne's done a great job leading to zero. You need someone like that. He's very entrepreneurial. There's a very entrepreneurial mindset, I think, in how he approaches things, and very, I think, on the cusp of things when it came to cryptocurrencies. I mean, you can talk crap about crypto, still having room left to evolve and really become an emerging currency or asset class, but he was really ahead of the curve on it. So hats off to him on that. All right. So another chart that's not looking too pretty right now, S&P 500 futures across the board aren't looking that good. What's going on in equity markets right now? What really happened here? And we're taking a look at the 5-minute chart. What happened about an hour ago? Well, there's supposed reporting in one of the major publications in China. I think it was one of the Beijing publications, that supposedly China's coming out with retaliating tariffs quite soon. Now, again, this is obviously shocking markets because trade wars, at the end of the day, whether they're an effective means to be able to, cause leverage for bringing people to the negotiation table, it's not good for the underlying economy. Obviously, no one likes tariffs. It makes the cost of goods and services go up in that case, and usually gets passed on to the end consumer. But no matter how you feel on tariffs, the fact of the matter is it's obviously causing a drop down in the markets right now. Obviously, you can see a direct correlation for when that news broke and how the market's reacting. So that's really all we have to work with right now. It was China's Global Times newspaper that stated these comments. And again, this is in retaliation to the $300 billion of tariffs placed on Chinese, or well, basically the tariffs placed on top of $300 billion of Chinese goods. And hopefully we'll have some more news on this to get a little more clarification. Now, this has obviously been one of the cornerstone topics that have been weighing down markets. There's another thing over the last few hours that's come in as well. And it doesn't get talked about really at all in the media. We always have a focus on China and the trade war. But we've been talking about the bigger underlying issue, and that is the, kind of fraudulent kind of, lowering of standards in the credit market that's been going on for a very long period of time. And what better place to look for this than in the shadow banking sector? Now, before I dive into the topic, to clarify for you guys, I don't want to just scare you guys with the term shadow banking. But shadow banking, for those of you who may not know, is basically a category of finance or credit markets, basically the banking sector, that is much less regulated. A good few examples of these in the United States that you might be familiar with would be banks like Quicken Loans and Rocket Mortgages. Again, they've really been the dominant player in this kind of shadow banking sector. These aren't your Wells Fargos, your Bank of Americas, or your Goldman Sachs banks. These are kind of more alternative banks that have less regulatory oversight. So hopefully that makes sense. Just less regulatory scrutiny and the way that they, measure for creditworthiness and conduct their lending process. Now, in the case here of India, there is a lot of concern here. 7 of the world's 10 worst performing bank stocks are in India. There is a huge shock, especially in one of the worst stocks here in India, Yes Bank, that's seen a 70% crash this year on concerns that lenders thinning capital buffers in this case. Basically, if I'm getting this, there's so many financial terms. Lenders thinning capital buffers in this case, from my understanding, would be that they don't have as much capital in this case in order to speak towards their creditworthiness. Being able to have reserves in the bank to make sure that people aren't going to be insolvent for borrowing too much credit and not being able to pay it back. Might be wrong on that. And also they're cash strapped in this case. I guess another way of putting it, they don't have enough cash to be able to really be creditworthy enough to really be taking out the loans that they're taking. And this has been a big concern with shadow banking. Take a look at some of the shadow banks in the United States. I talked about Quicken Loans. A lot of these banks that charge ridiculously high interest rates, they're predatory in nature, and they're lending out to people that in many cases they know are either not going to pay it back or very unlikely to pay it back in this case. That's why the rates can be so high. Again, it's this really messed up picture that ends up building a very high risk, high reward scenario. And again, I don't like how it's been normalized. But in India, it's played a huge role in the credit sector. Same here in the United States. They're filling more loans out than some major commercial banks. And now commercial banks are focusing on monetizing in other areas. So you've got a really interesting situation here in India. I mean, this has been a crisis in India and China for some time. It's just eventually that the dominoes are going to start showing. And it's already started showing in the stock price of a lot of these companies. Now, speaking and kind of finalizing on this topic here, we have to talk about a very interesting tweet storm that I found the other day. It was by an individual named Alan Farrington. Now, he went on a little bit of a tweet rant here, and again, I love when people make use of this because it's really kind of brought me some more kind of positive outlook to Twitter. You can sometimes get some really good insight from Twitter outside of a little sound bite that's meant to be sarcastic or witty. But Alan made a really good little feed here that talks about the kind of misconception of central banks and our understanding of growth. And I'm not going to be able to read through the whole thing. You can scroll through it yourself. Again, if you go to his Twitter page, you'll be able to find it. But the major point here is that we've had this idea that growth is simply just being able to, see things, for example, like GDP or, productivity increasing in this case, or, for example, capital injection in the economy, credit creation through the central banks. These kind of short-term kind of, oh, look, the economy is growing, indicators that we've been using. And really, it's a very far focus from what really is long-term economic growth and prosperity. We don't look at potential productivity if we did things different, if we invested more long-term. Everything is very short-term minded, and he uses analogies of cocaine and all kinds of things to really get his point across. Overall, though, I recommend you read it. It's really good, and it showcases how The Fed, the ECB, these central banks across the world have had a completely faulty view. They have done everything, single thing they can possibly to stimulate the economy, and all it does is stimulate asset markets. It continues to build a wealth gap in the economy. It doesn't build a stronger middle class. It doesn't boost manufacturing. It doesn't boost the underlying economy and the jobs market. And if you don't believe me, take a look at the manufacturing data. Take a look at the more realistic unemployment numbers that also count in people who have stopped looking for work. In the United States, I at least know it's around 6 to 7% if you take a look at the shadow economic statistics, and that's a much more realistic number, at least to the standards that I would set. I don't believe if you're out of the labor market and not looking for a job, or if you're barely working a part-time job, that you're employed. That shouldn't be the standard we set. Anyone with a little bit of rationale, I think, would agree with that in that case. You don't need to be, Democrat or Republican or whatever your viewpoints may be. That's a very, I think, American idea to want to set the standard high and say, that's not the standard we should set for ourselves. There are underlying fundamental issues in the economy. Let's bring them to the forefront and let's fix them. And maybe, just maybe, it has to do with having sound money rather than consistent credit injection in the economy, not driving ourselves into perpetual debt, especially under interest rates that we cannot pay back, which we are currently seeing right now in the shadow banking sector. And maybe we should focus on ways to reduce the costs of things like housing, of healthcare, of education, things of that sort that have been drowning people in debt that they will likely never pay back. And in many cases, people will never have the opportunity to acquire in the sense of those assets because they're so damn expensive. Anyways, I've rambled on enough, guys. Last thing I want to let you all know about is some of you might have seen it in yesterday's video. I have a email list website up if you guys would like to stay tuned for something that I'm working on. It's a startup in the cryptocurrency space that I've been working on, and it's for a lot of people. If you're out there and looking for a better interest rate from your bank account for your savings, if you're looking for a way to be able to trade a wide range of cryptocurrencies now that Binance is shutting down US clients from their core company, and along with that as well, if you want to be your own bank, if you want to have sovereignty over your own crypto funds and make it simple at the same time, definitely stay tuned. We've got a lot of things coming with this startup, guys. I've been working on it underneath the scenes for a while, so I recommend you guys will stay tuned for the updates for it. If you guys want, link is down below in the description. If you can enter your email, it means a lot to me. I won't spam your guys' email with stuff. Just want to let you guys know when it comes out so you can be the first to know. All right. Thank you guys for always thank you as always for listening to me ramble. I appreciate it. I love how you guys let me do this full time. I really do appreciate it. It's a fun thing to do. It's exciting times we're in right now. A lot of dominoes still coming into equity markets. We don't know if it be the trade war or if it's going to be credit markets and the huge squeeze we're seeing on currencies across the world and treasuries going negative, going towards negative yields. I think there's so much interesting things shaping up, and I'm so happy that you guys are here, excited about cryptocurrency markets, excited about other hedges like gold and silver, and really interested in getting a deeper understanding of the macro picture. It's going to pay off in the long term, guys. I guarantee it. The more you learn out there, the more you're going to be prepared for the world. And again, I like to think this is a good place where we can all come together and learn from one another. So if you've got a comment you want to leave it down below. Tell me what's on your mind. Meet with other people in the space. Network as much as you can. And if you guys like the video, drop a like. Thank you guys so much for watching, and I'll see you all in the next one. Stay tuned.